Good evening, traders. Welcome, everyone. Now, who's ready to learn how to make money this earnings season? Type a 1 in the chat box. I am sure ready. I have been waiting for earnings season to start, and I'm so excited. All right. So it's awesome. We have a full house tonight, and I couldn't be more excited to share my favorite season of all, earnings season. And I will share how I trade earnings season, and I will teach you how to trade earnings season. So this is not your usual webinar. No, this is basically a workshop. So be ready to take notes. And also you will be receiving the recording sometime tomorrow. So exploiting earnings season for max gains, trading futures, fast trades above average results this earnings season. So let's get started, everybody. Before we dive into the material, I just want to point out that all information that will be provided by us, by TradeOutLoud, is definitely for educational purpose only and should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. Because you guys know, trading involves a really high level of risk and may not be suitable for all traders, for all investors, because we could lose money. So before deciding to trade, please carefully consider your objectives, of course, your level of education, your level of experience, and your risk appetite, and of course, your risk tolerance. Individual performance depends upon each person's skill, time commitment, and effort. Results may not be typical. Individual results will vary. And you must do your own research and make your own trading decisions. So hi, everybody. My name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest in the markets. I have been a professional independent trader for more than 22 years. And prior to that, I come with 10 plus years in investment banking. I am also the CEO and founder, like I said, from TradeOutLoud.com, and we actually run a trading room designed for futures trading in the Power Hour, and the room started in 2017. But TradeOutLoud actually got started in 2010. That is when it first came out, and we actually started with the program, the Stock Swing Trader, which you actually see it right now. And it's one of the most popular services that we have. And it's designed for individuals that do not have the time to manage their own accounts. Well, we do offer, like I said, trading education for swing trading and for day trading, and as well for investing. We're going to come with a specialized course in the first quarter, by the end of the first quarter. And as you probably, some of you guys know, I specialize in high velocity moves. So a high velocity move, for those of you that do not know, is basically the ease of price traveling from the entry point into our targets. I am also the designer of an institutional proprietary trading system. And the reason why I'm the designer is because, hey, I cannot take credit for technical analysis. I can't. So I did put a new spin on it, and I basically based my decisions on 8 layers of price support resistance, not just supply and demand. That would represent just probably 5% of the equation. Specific trigger times, because I've noticed that there are times in the market that we have a much better reaction in price. And I've also noticed that sometimes I would take like the most perfect setup and the trade just wouldn't work. It just wouldn't go. Or if it would go, it would stop me out. So I studied this, and it was like literally a lot of labor involved, labor intensive. And it was for about 3 years before I came out with our proprietary timing into the market, with these trigger times into the market. I specialize in high, and when I analyze charts, I also analyze them for specific price zones. These are areas designed literally by institutional traders, where they scale into the trades or scale out of trades, enter trades. So as you know, institutional traders trade a really high volume of shares or contracts, and they cannot get in just like I do with my 3 contracts or 10 contracts or 15 contracts. they cannot do that. So they need the space to do that. Otherwise they would destabilize the whole system. So basically they scale in and they scale out every single time because they have really large amounts to trade. And of course, chart synchronicity and divergency. This is something that I watch every single day in the market, and it's very important because it shows you what has more power with what had more power for the overnight trading and how the day will be shaping at the open. So in other words, it's not something very sophisticated. Maybe the word synchronicity and divergency is a little bit sophisticated, but in a nutshell, what it really is, because we're talking about futures. I look at the Dow, I look at NASDAQ, I look at S&P, and I look at Russell pre-market, and I have a leaderboard. So I basically look to see if there is one index that is stronger than the other or one index that is weaker than the other. And then I look at the levels for potential follow through to the upside and to the downside. So it's nothing sophisticated. And in a strong market environment or in an environment that is dominated by some power players, for example, like Apple, Google, Meta, Nvidia, if they're strong, then definitely NASDAQ is going to have VEs to follow through. And we're going to talk exactly about that in tonight's presentation. So if you guys want to get a hold of me, you can actually go to our website, TradeOutLoud.com. You can find out more information about myself, about what we offer, about the education that we offer as well, and the services. You could also find us on Facebook, and the handle everywhere, whether it's Facebook, X, YouTube, or LinkedIn, is TradeOutLoud. So we're going to talk about earnings season. This is my favorite time to trade. So we're going to talk about what we can expect this earnings season and definitely how to trade it. So it's going to be how to. I'm not just going to show you, okay, this coulda, shoulda, woulda, and good luck to you, or this is what you need to do and good luck to you. I'm actually going to show you actionable ideas that you can benefit from as soon as tomorrow morning, because tomorrow morning we have just started earnings season yesterday. This is the second day of earnings season and we're just getting warmed up. We're also going to talk a little bit about gaps if we have plenty of time. And I'm going to take you into a little bit of an intro into futures and how to correlate them with earnings that are coming from stocks. How to create a game plan for the first quarter of 2025. And this is one of the most important things that we're going to discuss tonight. And how to predetermine entry stops and targets using technical analysis. And also, we're going to talk about how to trade stocks, futures, minis, and the best time to execute the trades. So we are literally jam-packed. So first of all, the impact of earnings season. So if you are newer to the market and if you're just trading futures and if you have just tuned in, if you're a futures trader, you probably don't pay much attention to what's happening into the stock market because that is where the noise is. Well, earnings season can have a significant impact on the futures market as it introduces a wave of new information about corporate performance, which in turn influences broader market sentiment and, of course, expectations. And here's how earnings season can affect the futures market. Number one, sentiment and volatility. Volatility meaning liquidity, right? So first of all, you have the surprises because nobody knows anything ahead of time, right? You have unexpected earnings reports, either positive or negative, that can create significant price swings in the equity futures market, such as the S&P, right, ES, or NASDAQ 100, that is NQ, or even the Dow, that is YM. And volatility often increases during earnings season as traders anticipate to react to earnings releases, making it an attractive time for short-term traders, meaning day traders, who thrive on market movements. Now, if you guys have been trading in December, you pretty much had a really kind of like poor experience into the market, because what happened literally towards the end of December was that FOMC meeting, that those dovish comments that came from Powell that literally spooked the market. And the market since then has been a whipsaw. So we had an experience of lower volume because it was coinciding with the period of holidays, right? We had Hanukkah, we had Christmas, we had New Year's. And then, of course, we had the beginning of the new year in which we had a couple of days off. So basically now we're getting into the rhythm. So we had the volatility back then because we had huge price swings, but we were lacking liquidity. So we didn't have a lot of market participation. And that is a really bad recipe for the market. When you don't have market participation, volume, and you have high volatility created by day-to-day events, and obviously the market is going to get slapped around by different events, by different announcements, because into the end of the year, and especially into the end of the quarter, especially into December, especially into the last 2 to 3 weeks, you do not have a lot of things going on. And every single little event that comes out, if it's negative, it's going to crash the market. And every single positive thing that is going to hit the market is going to be seen as positive, and you're going to see the market soar. Now, the second thing is sector-specific impact. Now, these are the leading companies with large market cap, like the Mag 7. Everybody knows the Mag 7 from 2 years ago. Last year, they had a really good performance, not as great as 2 years ago. Remember the FANG back like 4 or 5 years ago? They were literally the top stocks that everybody wanted to watch and have in their shopping carts. Have an outsized influence on the index funds. And especially into NASDAQ. Strong earnings from these companies can lift the entire index while a missed result can drag it down. So pay attention to these specific market participants, these really outsized companies, okay? And then you have sector correlation. Earnings reports from key players in specific sectors like banks, technology, or energy can impact futures trading tied to the sector indices or commodities related to the industries. And I can tell you right now, when we have energies that are reporting earnings, when we have financials that are reporting earnings, the one index that is going to start moving a lot is going to be the mini S&P, because the mini S&P is financial rich, and it's also energy rich. Now, number 3 is impact on commodity futures. That's right. Did you know that some stocks are going to impact oil? Yes, they do. You're getting demand signals. That means earnings reports can signal a demand for the trend. So, for example, strong retail earnings may indicate robust consumer demand, influencing energy futures like crude oil. And weak industrial earnings may suggest reduced demand for raw materials, impacting what? Materials like gold and copper. And let's take a look at guidance and outlook. Companies often provide forward guidance during their earnings calls. Just like the FOMC comes out, you guys know they come out with the rates, and what happens after they communicate the rates? 30 minutes later, they have the press conference. And that is basically the move that is impacting the market. It's not the rate decision per se, but it's the reaction to it off the press conference. And the same thing here. So for example, you're getting the guidance, right? And then you're getting the reaction. Okay. And then you have the Federal Reserve and interest rate expectations, right? So we had this on December 16th. You're getting the economic signals, meaning that the corporate earnings give you insights into the health of the economy, right? Whether to raise rates or inflation, etc. So if earnings point to slower growth, it could affect treasury yields and interest rate futures as traders adjust expectations for Federal Reserve policy. So why is this important and related to our trading, to our candlestick, to our system? It's everything. It's everything. So when you trade, not only that you need to look at the charts, but you need to look at the macro level of things. And you need to know everything that is going on to have a better executional decision, especially if you want to swing trade commodities, if you want to swing trade indices. Also, inflation indicators, input cost discussions in earnings report like labor, raw materials, etc., can impact inflation expectations, impacting what? The bond market, and of course the equity futures. Because bottom line, the stocks under these futures are going to be affected. Now, overnight trading dynamics, post-market reactions, and many earnings are reported after the market closes and that are affecting the overnight futures trading, right? So you get the report. For example, you get the FOMC decision at 2 o'clock, you have the presser at 2:30, and then the market closes at 4 o'clock. Definitely the market is not done. It's not going to wait for the next day, but it's going to try to digest the information as the market opens, as the futures market opens at 6 p.m. So pre-market strategies, traders often use futures to position for anticipated moves based on our overnight earnings data. And this is something that I absolutely love. We're going to talk in depth about it. Hedging and speculation. Now, institutional investors and fund managers, and why is it important to discuss about institutional investors and fund managers is because they have the larger footprint. They are creating the waves. They are the big sharks in the market. So we need to know ahead of time what their plans are according to earnings, according to all the data, according to economic data, and all the data that is coming into the market. Because institutional investors and fund managers may use futures to hedge. That's right, to hedge equity positions ahead of earnings announcements, adding to volume and volatility. Because as you guys know, or maybe may not know, hedge funds do not use hard stops. Institutional investors do not use hard stops. And this is the reason why they hedge. Speculators may take directional bets on indices or sectors based on anticipated earnings and trends. So earnings season, in conclusion, is a really high stake period for the futures market, offering opportunities, but also offering risk if you think about it, right? If you play it on the wrong side. So and if you're not informed, traders should stay really informed about number one, key earnings dates, right? So you go to your futures calendar, you go to your earnings calendar, you find out when the earnings, when the major earnings are scheduled. Then you look at sector performance trends just to make sure that they are in trend, or if they're against the trend, what the levels may be, and potential impact on macroeconomical indicators to navigate this volatile period really effectively and to start making money from it. Number 7, we have divergence between expectations and reality. Now, futures market often price in expectations before earnings are reported. If actual earnings diverge significantly from expectations, it can lead to a really sharp correlation or rallies. So the bottom line here is that the futures market, within the futures market, you're going to observe really dynamic moves within the earnings season. You're going to expect velocity, that is the ease to continue into targets, meaning literally the follow through. You're having the return of volatility, which is very important because oftentimes, and not oftentimes, but most of the time, when you're not getting a lot of participation in the market, especially towards the end of the quarter, the volume leaves, like traders are literally balancing. They're not interested in entering new positions, especially when you're heading towards the end of the quarter. You have the window dressing phenomenon. So you have a lot of things that are going on. You have option expiration. So you have a lot of things that you need to worry. And you guys know that ahead of option expiration, by the way, tomorrow is option expiration. Traders do not place many trades. And in fact, investors and longer term traders do not place trades around that time. But what they do is they manage, they hedge other elements. You're within earnings season, you're going to expect bigger price swings. So what does it mean when we get a bigger price swing? It means that we are going to have that nice continuation into the target. And most often we're going to stay in the trades longer. That means making more money. And most of the money is being made into the first hour. And that is the power hour, because you're either capitalizing on the earnings results that were reported the night before and capitalizing on the earnings results that you have received this morning. And if they're both in sync into the same direction, whether up or down, whether disappointing or whether they were extraordinary, you're going to benefit from the upside or from the downside. And literally the most active period of the quarter is the first 6 weeks. So you're here at the right time. And this is why we actually teach this course. It's a little workshop to traders just to open their eyes and just to make them aware of things that they should, be aware of, be careful, and also have a game plan, because it's very important to have your game plan. And I'm going to give you the game plan of what you need to watch and what you need to do ahead of any earnings within these 6 weeks. And this is when the big bucks are being made. So if you're ready to make money, it's not going to be on January 1st or 2nd or 3rd. It's going to be when earnings season starts. So it basically started on January 14th. It started with JP Morgan, Citi, so some other big financials, and it is just getting started. So I'm super, super excited. So where are we in the quarter? We're here, and this is where we are right now. This is the early phase, and this is the anticipation phase. This is usually the week before the big earnings are coming out. It is the kickstart of earnings season. So this is where we are right now. Next week is going to be week number 1, where we have 7% of the companies that will be reported earnings. And within these 7% of companies, you will see that we have really big names that I'm going to share with you in a second, and share with you what you would need to trade in order to make money, to make the most bucks, and literally have the best return on your time and your investment. Week number 2, 50% of the companies report earnings. And week number 3, you have 39% of the companies that are reporting earnings, and then you're going downhill. Week number 4, it's still very active, but you only have 22%, and then you have you have 3 over here. You have the 4%, 4%, and 4% in week 5, 6, and 7. And you can see here that the blue highlighted on the graph weeks are the most traded. That is when the big power players are in the game. And I mean like big energy stocks, big tech stocks, etc. So when do we need to pay attention to companies that are reporting? Well, companies are releasing their earnings before the market opens or after the market closes, and often causing substantial price moves in the underlying stocks. And this is outside of regular trading hours. The largest reaction typically occur when a company substantially exceeds or misses expectations. Having access to extended hours trading will allow the futures trader to react quickly to the news, to participate in the initial reaction to positive or negative news for the underlying stock. So that means that if we are going to see earnings results that are going to come, let's say, from Apple, okay? And if we have the earnings results that are going to be let's say on an afternoon, let's say they were tonight, right? You're already going to see a reaction into the market as soon as tonight, 6 o'clock. So 7:30 right now when we're doing the presentation. So you're going to see a reaction right now. More so, you're going to see a reaction when literally the Japanese market open, the Asian market opens, and you're going to have more market participation, right? So when the Asian market opens, China market opens, you're going to see a greater participation into the futures market. And don't forget that the US does not operate their futures, and their traders do not only operate from the US. They operate outside of the US. We have branches, we have institutional traders at JP Morgan, we have Morgan Stanley that are outside of the US, right? So you're getting those traders, those institutional traders are pre-positioning for the open, and they're getting ready to leg in for the open here. So if Apple reported tonight, and if Apple had outstanding earnings, and the price went up in the extended hours, right? In the post-market hours, you're going to see that NASDAQ is going to be the first index that is going to react, because it is a NASDAQ component. So for example, you can capture really big moves in NASDAQ from earnings reports from stocks like Amazon, Google, Netflix, Apple, Meta, Broadcom, etc. So your job right now is to create that framework, to create the game plan, because without a game plan, again, remember, you're going to not be informed. So what do I mean by framework? Okay. First of all, you need to look at the earnings calendar. So for example, on Monday, you can see that the market is closed. We do not have any earnings reports going out because we have a bank holiday. And then on the 21st, when the market opens, guess who will be reporting before the market opens? That is going to be Netflix. Netflix is a big component of NASDAQ. So guess where I am going, where you're going to see my footprints in NASDAQ, obviously. So I'm going to be watching very carefully to see if Netflix is going to have good earnings or bad earnings. And I'm going to try to position either long or short. It's going to be that easy because I'm going to have a correlated element. The same day, we have 3M. Now, as you guys know, 3M is a really big component of the Dow. So we could be watching the reaction in the Dow. And this is a time when, for example, if Netflix is going to report stellar earnings, then you are going to have NASDAQ up and you're going to have a tug of war, because if you have 3M that is going to disappoint with earnings, guess what? You're going to have the Dow moving down because 3M is a big component of the Dow, and so on and so forth. You're going to look at every single one of these stocks. You're going to look and see their impact into the market. And of course, play the big players like Tesla, like Microsoft. This is going to be a doozy here on January 29th. I can't wait for this date where you have these big players like Meta and Microsoft and Tesla that are going to report before the market, like literally all of them before the market. All right, let's continue. So why trade futures during earnings season, right? If you're a stock trader right now, you go like, I don't know why I should be trading futures. Trust me, I was not a futures believer. And I have been trading futures for about 10 years now. I have been trading stocks. I have been on the investing side, on the swing trading desk, for many years. So more than 25 years, more than 30 years if you count the 10 years that I've been in investment banking. So yes, I am used to trading the stock market, but it only came when my advisor and told me that, hey, you know what? We have other traders. We're doing the books for them. You know, we're doing their accounting. We're doing their whatever they're doing. And you're paying an awful lot amount of taxes by trading stocks. I was day trading, I was swing trading stocks, I was investing in stocks. So I was paying a lot of taxes. And they said, you know what, we do have another client, and this individual is paying way less taxes, like less than half. And I'm like, what? And I'm like, count me in, tell me what's the scoop. And they said, okay, what he's doing is he's trading futures. And I'm like, I don't know about futures, because like you're only trading like what? The market indices and a couple of commodities. Like and I'm used to actually scanning through 6,000 stocks. Like I'm always going to find a player, and I'm always going to find a stock either that moves up or down. I think I'm gonna have a very hard time just playing for charts. And not only that, but I'm only going to play probably one because they're either going to be in sync, or, you know, it's just like trading just the Qs or SPYs or the diamonds, right? And you're never going to play Apple. You're never going to play this. Okay, but nobody says that you cannot play this. This is a great opportunity for you guys to hedge. It's a great opportunity for you guys to take advantage of leverage. And since I started that, I did not look back. So now I'm a really active swing trader. I do trade a lot of stocks. In fact, you can see them from my transparent portfolios that are on our website. And I do trade futures for simplicity. And I only trade the power hour. That's it. So number one is the high volatility and volume. Volume, again, liquidity, that creates the opportunities. So increase market movements, right? This is what we want to see. We want to see the ease of going into targets. Did you guys see any ease of going into targets today? Nope. No, nothing. It was just a chop, right? So earnings announcement, particularly from major companies, can cause large swings in index prices like the S&P, NASDAQ, and Dow. This volatility offers opportunities for day traders or short-term traders to capitalize on rapid price changes. Then we have liquidity advantages, right? So we have the volume advantages. Now, futures indices are highly liquid, ensuring that traders can enter and exit positions efficiently, even during volatile periods. Number two, we have the broader exposure. So we have diversification. Futures indices represent a basket of stocks. The S&P 500 includes 500 large cap US companies, right? So instead of betting on individual earnings outcomes, traders can take positions that capture the overall market's reaction to the earnings season. And you have hedging opportunities. Traders holding portfolios of individual stocks can actually hedge their exposure by trading the futures indices versus the VIX. And we have pre and post market trading. This is an advantage. We have the extended hours. So if there's anything happening in the overnight market, we know we can take advantage of, because the futures market is open close to 24/7, allowing traders to respond to earnings announcements released after the market closes or before the market opens. And this flexibility gives us an edge in capturing movements before any regular cash market even opens. Plus, we have the leverage. I mean, who doesn't love trading futures? Futures trading involves significant leverage, allowing traders to control large portions with a relatively smaller margin. And this can amplify gains during earnings season when the market movements are pronounced. And then we have a sector-specific place, right? We have the heavy tech, and this is something that I do every single time into the trading room, every single time. And we talk about earnings season. I talk about the specifics of earnings season. We talk about what stocks report. We talk about what stocks are moving on the day. So it's not like we're just focused on, oh, okay, this is what we see. We just see the mini S&P right in front of us, and we're just gonna see the S&P chart till we die. No, we are trading what is in play that day. And you have broader market trends like an S&P 500 futures that reflect the performance of multiple sectors, making them a good choice for trading broad market sentiment during earnings season. You have reaction to macro themes. You have forward guidance, and this is exactly what I was telling you guys a little bit earlier, right? Because it's not only the earnings reports that comes out, but it's the guidance. So besides the actual earnings, companies' forward guidance often reveal insights about the broader economy, such as consumer demand, inflation, or supply chain issues. And this is going to impact traders' macroeconomic outlook and their future trading strategies. So correlation with economic data. Earnings season often coincides with key economic reports, providing also additional data points for futures traders. You guys remember, like we had the CPI data and the PPI data, and then we had earnings season. So the market didn't move on the first data that came out, but started to move on the second one along with the earnings. So you saw what happened. I have some charts for you guys. I can't wait to get to charts, but first off, you need to know what is happening behind the scenes in order to trade and to be on the stage and trade with the most amazing traders that are out there. So speculation and sentiment trading, traders can speculate on market direction based on overall sentiment during earnings season. Positive or negative results from key companies can influence market-wide sentiment, driving index futures higher or lower. Also, hedging and risk management. So portfolio protection, right? Institutional investors and retail traders may use index futures to hedge against potential downside risk in their equity portfolios during earnings season. You also have neutral trades, right? Traders can pair long and short futures positions across indices to hedge specific sector risks. Now, many of you guys in here may not be using hedging and risk management, hedging as risk management, but some of you may, because if you're really involved into the swing trading process and to the investing process, this is something that you may want to take a second look at. And also reaction to key economic announcements, key earnings announcements, market movers. So we're talking about earnings reports from companies with large market capitalization like Tesla, Amazon, Microsoft, that can disproportionately influence index movements. And traders who follow these announcements closely can position themselves accordingly. So they are so, so important. So here are some tips for trading index futures in this earnings season. So number one, stay informed. This is your game plan right here. Track the earnings calendar to know when major companies are reporting. This is number one, especially within these 6 weeks. Number two is you need to watch the key levels, right? So you're going to use technical analysis to identify reaction areas. You're going to identify the trend. You're going to identify support resistance. You're going to identify projections if you have an index that is or a commodity that is trading into all-time lows or all-time highs. Then you have to have a game plan for risk. Manage risk. How do you manage risk? First of all, you need to use stop losses. And the reason why you need to use the stop losses is because you need to position size, right? The difference between the entry and your stop is going to give you a number, right? It's going to give you a number. And based on that number, you are going to identify whether you can afford to take that trade or not. And by the way, have you guys seen the insane levels that we have in the market right now? Like I'm looking literally in the market and okay. I'm looking at the market and I go like, wow, this is a 5-minute chart and this is NASDAQ 94 points this morning. We had like 130 points into the Dow yesterday. So these are huge bars and we're talking about just one bar, let alone a setup. A setup could be like 150 points in Dow or 200 points in Dow, or you could have like 130 points or 140 points on a 5-minute chart into NASDAQ. So it's very important to manage risk. See if you can afford a full-size contract. You can see if you can afford a micro, or just don't take the trade at all if you cannot. Position size for the proper stop. Also, monitor overnight moves. Be prepared for market reactions outside of regular trading hours, because a lot of times you can take advantage of, let's say, of the movement that happens in the overnight. I'm a big overnight trader. However, within the last, I don't know, 6 to 7 months, I have to say I haven't been taking any kind of trades because the market has been relatively messy. So I'm really excited about 2025. I think that we're going to have many opportunities in 2025 for trading, and I'm ready to take them. And also combine fundamentals with technicals. This is something that is going to give you an extra edge in trading. You're going to be above 99.9% of the futures traders that are out there. Use insights from the earnings reports and for guidance to complement your technical analysis strategies. Now, yesterday we did have earnings from Citi, BlackRock, Wells Fargo, Goldman Sachs, and BNY. And take a look at what happened. So the day before, and this is not the data that came out before the market. We had data that came in before the market, but before that, before the data came out, we had some major earnings coming out. And a day before that, we had just data coming out and the market did absolutely nothing. It had no reaction. So the market was so eager to receive some financial information that it really popped hard to the upside. And you can see here, I took this snapshot just before I came into this presentation. And you can see here that the market went completely sideways. Why do you think that is? Because tomorrow is the option expiration day, and around the option expiration day within that week, you're going to see a lot of sideways action because prices are driven and prices are going to get pinned into strike prices. Let's take a quick look here at a smaller time frame of Citi, and you can see it here. This is the bigger picture. This is actually the 15-minute, and the white area right here represents the New York trading session trading. And you can see here that the move started pre-market started around 8 o'clock, right? We had the data that came in at 8:30, and this had the capability to move. And by the way, this is the chart of the Dow right here that you're seeing, and this is a chart of Citigroup, and you can see here that within the trading session, we had a very similar action in the Dow. So the index is literally incorporating the activity, it's absorbing the activity from Citi. Here is another example. For example, here, so here is Netflix, and Netflix, you can see here that it just plummeted, right? It just had some earnings results, and it just fell apart, and here is NASDAQ falling apart. So you can see here the synchronicity between the two moves. Here's JP Morgan, again, another financial down that continued to the downside right after earnings the whole entire day. And that had a huge impact in the Dow, and the Dow actually moved lower with him. It actually had a very similar pattern. Take a look at this pattern right here. This is a sandwich, and take a look at this sandwich right here. So it had very similar patterns. Also, this is IBM. IBM will report earnings as well. And I think 2 weeks, and you're definitely here. You can see that the price action snapped up, pulled back briefly, and then soared higher. And we have the same reaction into the Dow. IBM is a huge component of the Dow. And of course, sync your market with the stocks. This is so important. So have a market minder. You probably have a market minder on your platform. I assume 99.9% of traders do, and platforms have. So all you have to do is make a list, let's say, create a trading universe in which you are going to highlight some of the biggest components, let's say, Dow components, right? Biggest Dow components: Goldman Sachs, JP Morgan, UNH, right? So you have a lot of companies. 3M as well is a really big company. So have a list of those heavyweight stocks within the index and their impact. Watch their impact with the Dow. They're going to give you an edge like there's no tomorrow. You're going to have more winning trades just because of that, and you're going to start trading less and making more money because your focus is going to be mostly in earnings season, and look for either trend days or continuation plays, something that is very easy to trade into the rest of the quarter. Because remember, if you have been trading and you have been noticing that right at the beginning of the quarter, you haven't had the performance that you are expecting, it's not you, it's literally the market and the market gyration. And if you have noticed that if after these 6 weeks of trading, you are encountering problems and troubles into the market within the next 6 weeks, and if you made money the first 6 weeks and you're not making money within the last 6 weeks, that is because of earnings season. Now, prep a checklist so you can determine what to trade and when to trade. Now, number one thing that you need to do is identify on your earnings calendar when these big players are reporting. Number two, you need to trace your levels and trade your plan. So take a look at your charts, see where your support is, see where your resistance is, see what the trend is, see if you have any setups that are forming just before the earnings, and see if there are any setups that are present after the company reports earnings. And of course, trade NASDAQ, for example, when NASDAQ stocks are reporting. So don't be stubborn and just trading the S&P, because I have noticed this tendency in a lot of traders especially that do not know how to trade. They are driven to the S&P because that's the thing out there. That's the social media sentiment. And they're telling you, oh, you have to trade SPX or you have to trade the S&P. They have no idea that there are other things where you can make money. I could show you periods of time when we made money in Russell or NASDAQ and the Dow outside of the S&P. And that is because we had drivers into those specific sectors, specific stocks that impacted our indices. The best time to execute trades, obviously, before the market opens, and at the open, or after the market closes and after the company reports. And how to prep? Well, you need to know, again, when these certain stocks report earnings, you need to determine the key levels and plot your trade. Here is another example of Netflix. Netflix this time reported earnings at the end of the day. And you can see here that we had a pretty nice impact in NASDAQ. We had sideways range before the London session, picked it up and started to move higher. So yes, when you see something like this, that happens in Netflix, watch NASDAQ for an overnight move, because chances are that, and this is actually a trade that we've done some time ago, we are watching the overnight, we're watching to see some levels. And if you have, for example, a setup that is so evident with a good risk, by all means, go ahead. And by the time the market opens, you are already up. You have already made money. And then at the open, wait for another setup that can take, and you could double it, double your profit. So not only trading in the New York trading session, but trading in the overnight. So here's another example with NASDAQ and Netflix. Again, this is Netflix moving lower. This is NASDAQ moving lower. So they're relatively easy. You can see here that we had a breakdown pattern, and here we had a breakdown pattern as well, and how sideways the price has been all throughout the day. Also sideways action throughout the day in NASDAQ. This is the breakdown. Stop goes here, entry here, and it's going into targets. Here is one of those days that I showed you on the earnings calendar, where you have multiple companies reporting either before the open or after the close, but all at the same time. And here you had, after the close, you had Google, you had Amazon, and you have Netflix. I'm sorry, you had Microsoft reporting. So I had Google, Amazon, and Microsoft report earnings after the close, and they all reported earnings very close one to another. So they were like 5 to 10 minutes from each earning report. So guess what happened? Moved up, moved up, moved up. So why would you not be trading NASDAQ and pre-position yourself in the overnight and take advantage of this beautiful move? Because by the time you wake up the next day, you would be sitting on cash. Okay. All right. Here's another example of price action. You can see here that in this example, we have the Dow moving higher, and we have Walmart moving higher. Walmart is also a really big player into the Dow. Then once Walmart reported earnings and started moving higher, obviously the Dow started to move higher. The same day, though, the same day. That's why I'm saying, like, you should be very careful in selecting the same day. So we went long the Dow, and we went short into NASDAQ. Why? Because we had Apple that reported earnings, and that forced NASDAQ to move down. Apple, again, big component of NASDAQ, made the whole index weak. So we had a short and we had a long, and we've had this several times. I haven't even documented how many times we had it, but we had this several times in our room, and everybody was sitting on the edge and saying, oh my gosh, I don't know how we can do this. Like, how can you do this? How can you do this? How can it be long one index and short the other index? And we made money in both. That's the secret. That's the secret sauce to successful trading. You just need to put a little bit of elbow grease. Now you have all the information. You don't need any other information. This is it, what I have provided for you tonight. Okay, so how to determine your ESTR. ESTR is the entry stop target and risk based on your technical analysis and what you need to look for. Number one, you need to identify the trend, right? So you basically look at the chart and you want to observe higher highs and higher lows for uptrends, or lower lows and lower highs for downtrends. You need to identify support resistance areas. You need to identify time frames and to be in sync. So for example, you don't have a daily sell setup and a downtrend, and the smaller time frames are telling you that the price is going to go higher. And then you have the 1 minute and the 2 minute that are correlated, and they're trying to move a little bit higher, because that's just going to be a temporary pullback before the big push to the downside. And you're caught by surprise if you were trying to go long. So try to go with the flow. Try to go with what the market is telling you. Try to go with what the bigger time frames, the larger time frames are telling you. And then all you have to do is plot the ESTR. Look for the setup. Basically, you're going to have to identify the setup, and there's no trading calls. Oh, I'm going to get in here into this area. There's no gray area in the market. You're either getting at a certain precise price or not. It's not like, oh, I'm going to buy it off support here just because it's an uptrend. I'm going to buy it off support. You don't have a trigger point. You need to have a trigger point. You don't have a trigger point, you're going to get in. The price is going to, meander within the area that you're at because it has been sitting there for a while. It's trading on support. It's accommodating itself over there. And then you're going to see like, oh my gosh, it's not moving anywhere. It could stay there for a whole entire day, or it could go a little bit higher without even like, you can't take profits. It's gonna go like 5 points higher. It's just gonna kill you before it shoots down and it stops you out. So you have to know triggers into the market. You don't know triggers, I'm telling you, you're missing out at 99% of profitability in the target. And try to determine the entry based on the chart time frame again. So I'm pivoting again on time frames because they're so important. And a lot of times, day traders ignore looking at higher time frames, when in fact, the biggest information that you're gathering within the day is reading the weekly and the daily. And that's going to dictate the 1 minute, even the tick charts. And then you're going to define your entry based on your strategy. You're going to place your stop, wait for the trigger, and have definitely a trailing method that we're going to apply. Again, analyze the overnight price action going into the New York trading session. So again, it's all about identifying the levels, identifying the ranges, again, identifying the trend, and pullback buys or pullback sell zones or breakout areas are some of the most important things that you need to watch in the overnight action. And of course, map out your entries, associated with the risk, and of course, determine your targets. So take my advice. No one has a crystal ball, and what seems certain one moment can change in the next. And our job as traders is to find low risk setups. Obviously, position size, because if you don't position size, you're going to blow up your account, guaranteed. Like guaranteed. You're not going to blow it up this week, but down the line, you're going to blow it up. And of course, our obligation is to manage risks. So I'm going to answer some questions right after this. So trading is a very serious business. It's the hardest thing that you'll ever do because it's not easy. But once you know how it's done, it's a walk in the park. It's not a hobby and it's not entertainment, but it is a lifestyle. So I take it very, very seriously. You cannot learn how to trade from a DVD or a book. Literally, you cannot do that. I haven't ever tried. So what I did is I tried to find a mentor when I first started trading, day trading, because I'm coming from the investing field, from swing trading field. And trust me, that was quite an adjustment for day trading because you're using different strategies. The price action is so fast and everything is so fast paced. You got to be really sharp. And of course, your attention to detail has to be super, super fast because things are going to change in an instant. So the way I started trading, I found a mentor, or I would say mentors that and when I found them, I wanted to achieve success sooner. I wanted to be like them sooner. So I hired them, and they have coached me. They have taught me how to trade. I'm one of those traders that could not pride itself with blowing up an account. I've never blew up an account. And I believe that traders that blow up accounts are reckless and are literally missing the most important thing in trading, which is capital preservation, which is risk management, and of course, position sizing. These elements are the most important elements. When you start trading, you need to start your trading journey with money management. That is the first thing that you need. After that, you can learn how to trade, but first is money management. You have to learn how to protect your money. And then after that, you learn how to trade. Okay. And you learned, different strategies and different things. And after that, you open a brokerage account. Okay, so when you take a trade, think about this. Who's trading with you or against you? So the next time when you're going to go and say like, oh, I'm just going to get in here and see if it works. If it doesn't work, then I'm going to get stopped out. This is where my stop out is. And you probably are putting an area that is like crazy pants bad for the market, because the market has a system of taking out stops immediately. Because I don't know how many of you guys know, but every single broker that I know, has a design algo that is sending all the information to hedge funds, hedge funds like Citadel and all that stuff. Remember the Robinhood Citadel debacle back in like 2 years ago or something, or 3 years ago, right? So that's what happens. They sell our data, and yes, it's legal. So they're not doing manually. No, they have algos for that. They know exactly where we enter, where we stop, okay? Where we put our stops. All right. So if you want to be successful, you need to live and breathe trading. You need to really love what you're doing, because if you don't love what you're doing, then this is not going to work for you. And this is definitely not a get rich quick scheme, because trading is a marathon and not a sprint, literally. And I think one of the most important things in trading is to find somebody that that can mentor you to get you the results that you want faster. Because if you're going through trial and error, it's going to take you forever. You may not get to where you want to be, and you may blow up that account after account after account, and you're going to get tired. You're going to say, oh, trading is not working. This is not working. This is not good. Nobody's going to make money. Nobody's making money in the market, where in reality, it's all your fault. Okay. So basically, you have to have someone that is going to teach you how to trade. And you're going to have to find someone that fits your lifestyle, and a style that fits your lifestyle, and someone that, matches your personality. Okay. And of course, that has proven results. I think that's the most important thing, because there are so many people out there that say, oh, I'm going to teach you how to day trade for $400. I'm going to teach you how to day trade for $99 or $97. Buy my blueprint, do this and that. And you're not going to get the results. You're not going to get any kind of results, because you're putting $97. It's worth $97. It's probably worth zero, because you too can gather that information probably from anywhere in the internet. When we teach a course, or everything that I share in the trading room, 90% of the things that I share, you're not going to find anywhere on the internet. 90% because they come from years and years and years of studying, and they come from my mentors. Okay. So success, also, you have to be aware that success takes time. It's not going to happen overnight. If you expect to get rich quick, definitely you're going to fail at this. And one of the things is that keep on trading, because no one wins on every single trade. There's no such thing as 100% winners. Okay. Because this is not investing. This is not holding a position until it goes back up again. This is day trading. So there are going to be losers. Even the best traders lose. Even I lose. Okay. But my losses are very small compared to my winners. And I win most of the time and lose very little. And that is one of the keys. So if you're too broke to invest in yourself, get used to saying that way, because it's the reality. In trading, you have an option. If you're average, you're not going to make money. You have to be the best. It's not even that you suck at trading, because obviously that means that you're blowing your accounts, but you have to strive to be the best, not average, because average is not going to make you money. So you have to evaluate yourself, introspect, and say, hey, what kind of trader am I? Am I a welfare trader, not successful, eternal student, never committing, right? Blaming others for my trades? Or do you have the millionaire mindset trader, right? So we provide the right tools you can use to fast track your trading. We provide education if you need a trading education. We just wrapped up a massive course, and we're just going to open the doors again very, very soon. We haven't opened the doors yet, but we're going to be opening doors for a March class. We offer live assisted 100% guided trading. I don't know who else does this. Like, I haven't met anyone or any service, or haven't heard of anybody that tells you when to get in, tells you your exact entry price to the tick, your stop price to the tick, your targets to the tick, and also helps you manage the trade. Literally tells you when you need to lift your stop, when to take partial profits, when to exit the trade, and you can learn from all that. So very few traders know that if you need to reach consistency, you need to have great education and, of course, a great support system. So who's ready to learn, earn, and join me on this amazing journey? The power is literally in your hands. It's up to you to change your life. Literally financial freedom, trading just a few minutes a day. I trade the power hour. So basically my focus is into the first hour of the day. And I have a special offer for you guys. And that offer comes from the futures trading room. So I trade from 9 o'clock. We open the room at 9 o'clock. I come on the mic a little bit later because I watch the market. It's not that I'm, going for a walk, but I'm watching the market in the first 15 minutes to see how it's reacting as it's getting closer to the open, if it's changing any levels. Okay, so I'm there in the market from 9 o'clock to 9:15, but I'm not on the mic because I don't want to entertain anybody. This is not an entertainment room. I just study the market and I'm getting ready for the open. And then I'm coming on the mic around 9:15 to 9:20, and I'm doing the pre-market game plan. So we're going through all the stocks. We're going through the game plan. We're going through the game plan. We're going through charts, all the time frames. We're going through the economic reports. We're going through earnings reports. So we have a good idea. And I also walk you through the major power players of the day, whether Bank of America is going to report earnings. By the way, tomorrow, Bank of America is reporting earnings. So if you're interested in my offer, you could go ahead and I'm going to give you the link right away. I'm going to type it right here in the room. Okay, so what we offer, I'm just going to take you very quickly to, let's see where, okay, no. Oh, where is it? Okay, here it is. Sorry about that. So I had to click back and forth. All right, too many tabs up here open. So you go to services and I'm going to type in here. You go to the futures trading room. So I'm just going to copy it and post it in the room. And I'm going to be answering some questions in a second. All right, so this is the link, and we have the live trading room. Remember, I have been leading this room since 2017 and January 2017. If you're interested in finding more of what we do here, this is a really thorough description of what we do. We open the trading room at 9 o'clock. Until about 11:30, we do the pre-market game plan. We do have a private feed that I'm going to share with you. This is the private feed. So if, for example, we are in a trade and I call a swing trade, because today we called the swing trade in gold. So my members are going to get information on that trade that is a swing trade, right? And so the trading room is not going to be open. The trading room is not only for day trades, but it's for swing trades and futures, not stocks. That's a different service that we have. So for example, you're not on your own saying, oh my God, what am I going to do now? I have achieved the first target. There's so much unknown. What am I going to do? So you're going to receive the updates here in this on this page. So we have the private feed 24/7. You can stay connected with us. We do provide you guys with the performance portfolio, and the performance portfolio is right here. Okay. And not only that, but we provide you with a risk management tool. So this is your risk calculator. We provide you a calculator based upon the entry and the stop. You can determine your position size, and you can see whether you can afford to take the trade or not. And you have some other information here on the bottom. You have the roll dates, you have option expiration. Here's the roll dates, you have holidays, and our disclaimer. And here are all the trades that we have done this within these 2 weeks, barely 2 weeks since the market opened, and we're already up about $4,000 per contract, that is. If you're interested in signing up, we do have different plans for you available. So we do have an yearly membership of $2,999. Basically here, you're going to pay just for 10 months. And you're going to have access to 12 months, right? So you're getting 2 months for free here. The monthly is $299. We also have non-commitment plans, right? So what is a non-commitment plan? It's a pass. It's a 1-day pass experience and a 5-day pass experience. And if you have never experienced our trading room, you could get a 1-day pass. It's not renewable. So we're not going to charge you saying, oh my gosh, you're getting $25 the first day, and then you're going to get billed for $299 or $2,999 for the whole year. No. This is you're coming, you're seeing whether it's for you or not, and we're done. Okay. And this is the 5-day. If you want to say, hey, I really want to know what's going on in the market, because if you get a 1-day, guess what's going to happen? Tomorrow's option expiration. What are the chances of having a good and reliable trade tomorrow? Like, seriously, can somebody answer? What are the odds of having a really phenomenal trade tomorrow on option expiration? You guys know what happens on option expiration. 0. Okay, 0. So you're taking it on a Friday and go like, oh my gosh, I don't like the trading room because like they didn't call a trade, right? She's chicken. No, it's the trading environment. And then you have a 5-day pass if you want to say, hey, I want to get there for 5 days to see, to see how it works, to see if I can keep up with it. Okay, so you have the option from these 4 plans. I put the link right there in the trading room. So what else do we offer you? Well, we offer you the opportunity to stay on track, and you have this performance portfolio, which is the tracker. Okay. We also, and by the way, on the website, you have the performance. Look at the tabs here. Look, I put my money where my mouth is, right? So you can see here, we have the records from 2017, 2018, 2019, 2020, 2021, 22, 23, 24, and this is 2025. We're going to release these trades at the end of the month, right? Because we have some ongoing trades right now that we don't want to share because some trades are going to be open, like the gold one right now, and we don't want to share it with anybody yet. You're also going to get, oops, where is it? Okay, that's pretty much it, guys. Okay, so yeah, so you're always going to get constant market analysis with us. You're always going to get a lot of information outside of the regular futures trading. So it's going to be a very motivated environment. It's going to be a really fantastic experience. All right, I'm open for questions. Okay, let me see. Okay, John is asking, when is the next class starting? The next class, we haven't set the dates yet, but it's going to be in March. Not yet sure what date in March. Most likely it's going to be into the second or third week of March. And it's going to be the 5-day Power Income Futures course. And we're going to offer the swing trading course at a special price for you guys. So we have just decided on this super deal for you guys. All right. Okay, James, when we sign up for the futures trading room, what hours is the room active or open? The room opens at 9 a.m. and it closes at 11:30. We specialize in trading the power hour, where the velocity moves are. And if we have swing trades that are going beyond the trading room hours, we are going to manage them through our private X feed. Do indices drop around Christmas and New Year's? The answer is no, and it depends on the context. Usually, if you have you are going to have a Christmas rally and window dressing effect that are usually driving the price up. But this year we have had a very dovish, comments from Fed Chair Powell in regards to inflation and further cutting of rates. And this is the reason why the market was pretty much haywire and it was going back and forth. Chris is asking, do you trade Nikkei? No, I don't. But if you have the proper education, you can trade anything you want. And the reason why I do not trade it is the volume. literally doesn't have a lot of volume. I trade something that is liquid and that has a lot of participation, and it's really providing me an ease of getting in and getting out. Yeah, I agree. A lot of people are blowing accounts on prop firms, and this is just a suggestion. If you decide to go through the prop process, I actually like the prop process because it's going to force you to be a very disciplined trader. Okay. Okay, another question about the course. Please email me and I will give you all the details about the next course. All right. Yes, the trading room, I will put that back. Is it okay? Here's the link. Again, if you want to opt, yes, that's for the year, $2,999. Yes. And if you talk to your accountant, and if trading is your business, you literally, it's talk to your accountant. It could be um it's great for your taxes. Could be deducted from taxes. So yeah. Yeah, so that's pretty much it. The course, okay, so let me share the course. Okay, education, here it is. This is the 5-day course that we're gonna have in March. And it literally teaches you everything from A to Z. Everything from A to Z. And that's $59.99 for the course. Yes. And like I said, we're going to have a big promo on that where we're going to offer the swing trading course at a really crazy price, crazy pants price. All right, this is it for tonight. We will send out the recording sometime tomorrow evening. So thank you so much for being with me here tonight. And thank you for the questions. It shows me your interest in trading because remember, you have to stay really informed when it comes to the market. So thanks so much, everybody. Have a great rest of the night. Thanks for giving me an hour of your time. I really hope it was worth spending it with me, and I'll see you guys in the trading room. Thanks so much, everybody. Have a great night.